Hey guys, how's it going? Brian Burns here with the Master Key Group at RE/MAX Downtown, and welcome to the next episode. We are talking about the fundamentals of real estate investing. Now, if you have not seen any of the last episodes, I would definitely go back because that is where we've laid the foundation for what we're building on for today and for the rest of the series, and that'll get you up to date. What we've been talking about this last episode and what we're talking about for the next few episodes is the pros and cons of different types of real estate products. And by products, I mean, home types, condos, townhouses, single family, multifamily, luxury. So that's what we're going to be going over. And today, obviously, we're doing townhouses and condos. Last week, we did single family and multifamily. Next week, we're going to be doing luxury and new construction. Week after that, we're going to do a deep dive into short-term rentals, which I know a lot of people are super excited about because that's kind of the latest and greatest thing. So let's not delay anymore. Let's get into it. So what we have, townhouse. Easy to manage, which we'll kind of build on this because your HOA handles a lot of the stuff. So you don't have to worry about, if they've got ants, you have to find a pest company and do all these things. If, the grass isn't getting cut, you don't have to worry about, being all over your lawn guy or something like that. If your pool's turning green, you don't have to be, in constant, conversations with the pool guy. All of that stuff is handled by the HOA, and that's for both of these. So it's a lot less hands-on, so it'd be great if you were not in the immediate area or somewhere from out of town or out of state. Makes for a great investment for that in particularly. So you have low insurance, and that goes for both of these as well. So, as I mentioned before, your roof, your exterior, your landscaping, all of that stuff is covered by the HOA. So you really actually don't have any of those those big ticket items that an insurance company will have to pay for, so your insurance is lower. So for an example, you may have a single family home at the same value as this townhouse. The single family home will have an insurance of $150, and this may only have one of $50. And you have to think as well, that goes right into your bottom line when you're calculating your numbers. So that is definitely a plus there. Obviously, the less outgoing money. It is easier to sell, so this would be easier to sell than I would say a condo, okay? Because condos, they're not generally, they have a size restriction usually. They're not too big. When you have townhomes and single family, you have another family moving in there, potentially another investor. So they are generally easier to sell. And they have a lower point of entry. This would be compared to a single family home in the same marketplace. So you could go to two different sides of the state and find a townhouse that costs just as much as a single family. But this is in the same marketplace that, in the immediate area. Now the cons, they do have higher carrying costs because you have those HOAs and you have those HOAs, which are the big ones. That is paid no matter what, whether you have a tenant in there or not. And so, because they cover pools, they cover all that stuff. So whether you're using it or not, you're still going to end up paying for it. Your appreciation and rent is determined in large part by what your other neighbors are doing. So it comes down to this: people are only willing to pay so much more than their neighbors are. Now, this is the same anywhere, but a single family home, we discussed this last week. If I was to take $30,000 and put it into a single family home, a townhouse, and a condo, I would probably get a better return on investment by putting it into a house. The same thing with the upgrades that you do and corresponding to your rent. So people are only willing to pay so much more, especially because townhouses and condos, they're essentially built to be identical to each other. So people are they're not willing to pay $300 more than their neighbor just because the kitchen's a little nicer, generally speaking, right? And then your HOA. Your HOA for both of these, can always be an issue. So, and we'll dive more into that with condos, because condos is where it can really kind of hit you. Condos, these are very hands-free, so you really don't have to do much with them. Like I said, the worst thing you could probably have happen is your AC goes out, and maybe that's a $3,000 fix. That's probably your biggest ticket item, and that goes to the next one. You don't have these big ticket item replacements because you're not covering your roof. You're not covering. You don't have to resurface a pool. You don't have to do any of those things. Your biggest ticket item is going to be like a $3,000 air conditioner. Now, you have lower insurance. Same thing goes for that with the townhouse. Lower point of entry. I would say it's even a lower point of entry than townhouses, obviously looking in the same market, right? But then on the con side, you do have like I said, your appreciation and your rent is very much based on your neighbors. So, and even more so, I would say in condos, because they're generally smaller and there's only so much you can do to a condo to make it $300 more than what you're, than what they're paying for one of the neighbors, right? Because if you look at a condo building, if you're on the 10th floor and you're in the same, and you're on the 30th floor, it doesn't matter. Every single unit between you is identical. So yes, you can charge more based on the height and things like that, but you can't charge as much per like upgrades. Now, your HOA, now this is where your HOA can really get you into some trouble. Not to scare you away from condos, because this isn't something that happens all the time, but I'll give you a great example of how a condo can really mess with your earnings, but also on your resale. So, for instance, a building in the downtown area here in Orlando, they had to repaint the building. And so what happened is they passed all of the costs of repainting the building because they weren't doing their budgeting correctly, to now every owner has to pay $15,000 over the next 15 years. So now their HOAs have skyrocketed. Now they're paying HOAs that are higher than some of the luxury condos downtown, who have a lot more amenities. They do valet, they have a concierge downstairs. This building doesn't have any of that, but you're still paying the same amount, and you're only just getting a fresh coat of paint. So not only does that go into your bottom line on your monthly rent, because now you have to do one of two things. You either have to eat the cost and not make as much money, or you have to try and raise rent. People may not be willing to pay that higher rent, but also when it comes to resale, if you're trying to sell your unit, but the one down the street has a comparable price, but your HOAs are higher with less amenities, then that's going to cause an issue down the road trying to sell it as well. Like I said, I don't want to scare you out of like a condo, but this is a good example that just recently happened that really can highlight what could possibly happen, and why I think, why HOAs can really hurt you. But they do give you a lot of good benefits as well, but this is talking about the con side of this particularly. So with the high HOA cost, that would be your carrying cost. That would trickle down to that. So when it comes down to HOA costs, there's a lot of communities around here where they have single family townhouses and condos all within the same, master plan community. Your single family homes probably have an HOA of maybe $150. Your townhouses have them for about $250, but your condos will be about $400, $450, even $500 a month. So that kind of shows you the scale to which a condo association can cost you. Now, your mortgage and rental restrictions. The biggest mistake people make is they come into any condo and they think they can just rent it out. Actually, a lot of condo buildings have a percentage of the residents there that have to be primary residences. So that means that, say it's 70%. So that means that you have to go on a waiting list until someone stops renting theirs out and either sells it and someone's living in it, or they go to live in it themselves. And then one person gets bumped up to the next list. So you could have a list that's 5 years long. But not only that, but with the sale of the property, that can also kind of limit your buyer pool. Not to say that you can't sell condos, but it does limit your buyer pool to have a more strict mortgage stipulations on it, because some condos can require 20 to 25% down, depending on the building, which obviously, like I said, limits your buyer's pool. So hope that was some good information today. I know it's a lot, and so next week we're going to be going over new construction and luxury. Both of those seem very odd. People think, you pay a premium for new construction and luxury houses are so expensive. Who would rent these out? I actually just recently acquired a new construction for my portfolio, and I absolutely love it. So I'm actually excited to go over that with you, and I'll be able to give you some real life experience with that. And luxury homes, you'd be surprised. I mean, especially now we have, the NBA is about to play their entire season here in Orlando. So I'm sure there's a lot of very nice luxury homes that have just found some new tenants. So I'll talk to you guys then. Bye.